All right, Wall Street taking a tumble this morning after a disappointing jobs report. Here's a live look at the markets right now. The July jobs report showing unemployment rose to 4.3%. This reigniting fears for our economy and a possible recession. We welcome now Tom Gimbel, founder and board member of the LaSalle Network. Tom, great to have you. Thank you for hopping on during this breaking news. Let's start here. What does this mean for the everyday consumer?
Well, Kelly, it's really a double-edged sword on this one. Short term, we're going to see that inflation continues to come down and the dollar will actually be able to buy more products for the everyday consumer. On the flip side, what you have is unemployment on the rise and jobs are a little bit harder to come by for people. And if companies like Intel announce that they're doing layoffs, Starbucks and McDonald's missed their earnings. So we are looking at probably a little bit of a bumpy bottom. However, what we're also going to see is that this will probably be the impetus to make sure that the Fed lowers rates in September. And then I think you're going to get a sugar high for the last part of the year, and that'll be good for the consumer.
So for those in the financial field keeping tabs on all of this, was this anticipated? Is this a surprise? And how do we rebound from it?
Well, number one, I don't think it was a surprise. Obviously, it was below what the economists estimate, but economists aren't on Main Street, and so they don't see what's going on. What I've seen in talking to CEOs, CFOs, and heads of HR is that there hasn't been a bullish feeling about the economy, whether it's the geopolitical landscape, whether it's the pending election, or just high interest rates altogether. And so when we see this number, the other thing is we've had higher numbers in previous months, but we're also getting revisions every month of lower numbers. So the 114 isn't really that much of a surprise to those of us that are talking to people and working in the field on a regular basis. Where this goes, I think we're going to see that it's going to be kind of the unknown. But like I said a few minutes ago, having low interest rates coming in September will give an artificial sugar high to the economy. And I think we're going to see some real deals happening in the latter half of the year.
What do you believe will be the result of that sugar high, as you outlined?
So what we'll see is stock market will go up. We'll see a lot more cash from the sidelines, whether it be venture or private equity deals that get done. And as rates come lower and people get excited. But what we'll see in 25, and I don't think it really matters who wins the election from this perspective, is that the first year of any new administration, the economy and the market doesn't usually do great. And so I think what it'll lead to is the realization that a bull market doesn't last forever. And I think in 25, you're going to see a much more bear market, both on the job sector as well as in the stock market. Not crazy, not terrible. We're not talking Great Recession or Q2 of 2020, but we are talking that it's going to be a little bit rough, probably similar to what it was in the early 2000s and early 1990s.
You know, Tom, as we're looking ahead to this general election in November, keeping it to the economics of all of this, will there be moves made to artificially sort of make this better for voters? And what will the effects of that be? When you look back historically at the market having trouble this close to an election, what are the typical steps that are made?
Well, I think number one, it really gets into, is the Fed a political function or is it unbiased? And the lowering of the rates will lend it to believe that the current administration wants to boost the economy going into the election. However you want to judge that. And I'm calling it right down the middle on that one. But that tends to be what'll happen. I just believe that what we're seeing, when you see companies like Starbucks and McDonald's miss their numbers, and then you see a chip maker like Intel announce that they're going to do a lot of layoffs, you start to see that there's trends going on beyond just the stock market. You're seeing that when you have fast food and coffee retail not doing well, and when you see a company like Intel, which is on the B2B side in the chips manufacturing business, not doing well, that sends it from both sides of consumer and business that we're just not looking at the bullish situation we've had for the greater part of 2.5 decades. I mean, it's been an uncanny run for the last 24 years.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.